Let's take a closer look at closing costs in a real estate transaction. This is often a question we get from buyers we work with, so today we'll explain visually.
This is you. This is the house you're buying. These are the sellers. You made an offer and they said great. To finish this, your real estate agent will help you through the closing process, and you will pay some closing costs. This video explains this and these. Closing or settlement is about you becoming the legal owner of this. Public records currently agree that this belongs to them because the title establishes their legal ownership. Swapping these requires loan steps, legal steps, and title steps. Loan steps first. These guys loan you the offer money. You promise to pay back more over time. They charge you some loan fees and collect insurance, interest, and reserves as part of your closing costs. Legal steps next. To make the public records show that you are the legal owner of this, the government has to record the transfer of this, and they also take a little bit of this. Title steps last. The title company actually handles the transfer of this. You pay for their help. They have to find all the records here that relate to this and make sure that this is really theirs to sell to you. That's called a title search. And the sellers might have missing heirs, former spouses, or other claims that show up long after the sale, claiming that this actually belongs to them. To protect this investment, you purchase title insurance. To recap, closing involves loan costs, legal costs, and titling costs. At your closing meeting with the sellers, your title company will have all these costs summarized on the government HUD-1 form.
In today's market, with rates as low as they are, we often see buyers ask the sellers to pay for a portion or all of their closing costs as part of the deal. What this means for you as a buyer is that you will bring less cash out of your pocket to closing, but your mortgage will be higher with these costs included. Sellers typically don't mind you asking them to pay your closing costs because they just look at the net offer after deducting the costs. If they're okay with the net amount, they will accept your offer. As an example, let's say you offer $200,000 with the seller paying $5,000 towards your closing costs. The seller really sees a net offer of $195,000. After they deduct the $5,000, they will be paying towards your costs. But let's say you just offered $195,000 with no closing costs paid by the seller. In the eyes of the seller, these two offers are identical. So when you're considering closing costs in your purchase, you are really deciding on whether you want to build them into your loan and have the seller include them into the purchase, resulting in a higher final mortgage amount, or if you want to pay them in cash and have a lower overall mortgage. There are a few important things to consider when you're deciding on how to structure your closing costs. Be sure to talk with your agent and your lender about what option is best for you.